the key to actually taking good trades in the market is really your high time frame key levels. Like I encourage you guys to do this. Look at your charts for low time frame entry models, chart them all out. Look at how many fail. If you were to just take low time frame entry models and any entry model, it will run your account to zero quickly. I have a very refined low time frame entry model. I talked about in my last video. I divide inverse fair value gaps into three different categories. It filters out a lot of losses. It's super refined. I've worked a lot on it, but really none of them matter without high time frame bias, key levels, strong liquidity, stuff like that. So in this video, I'm going to talk about how I find my high time frame key levels because I do it a little differently than how I see other people do it. And that is I only look at time-based ones. So I don't look at just any low or high in the market. I only look at time-based ones. So like this was today, going into pre-market, I had this marked out, Asia low, London high, pre-market high right there. And I was looking for Asia low to get swept and then run higher. I took a trade based off that, got stopped at break even, but the logic is still a good learning point. Because they're time based, right? Because why are we looking at time based key levels? Because everyone that longed in the Asia session in London pre market, where are they gonna have their stops? Right here. Everyone that was short London session stops right here. Everyone that shorted pre market and people looking for breakouts at the 9:30 open pre market high right there. And that just allows you to cut out like all the lows and highs that don't matter. Like I don't really care about this one. It's more low resistance liquidity. This you don't really care about that, like 4 p.m. whatever. Like running that's not really going to be too important. And I mean that was true. We ran higher. Um, and this applies to more than just highs and lows. You can look at for value gaps like this one. I really like because again, it's time based. This was the CPI candle, so this is a really important time based high time frame key level, and you really need these to base your trades off of. Like for example, today I used my entry model. This was a reversal model, and it was a good trade. Got stopped at break even, but it had high time frame logic behind it because of these key levels. I was like, all right, everyone that was long in Asia, I think we're gonna stop them out. We did that here. We ran out the Asia low, and then we have low resistance liquidity up here, right? We have a bunch of stops here at the pre-market high. This is gonna be low time frame, intermediate resting liquidity, and then we have the London high up there. Everyone that was short during London going to New York probably trailed their stops up there or had their stops there in the first place. So I longed it. This was our break even point, got stopped there, but it's still, like I said, it's a good learning point how to use those time based high time frame key levels to sort of frame narratives for a trade. And then again, like I like this one, time based. You want to look at time based stuff. I mainly use highs and lows and fair value apps. That's really all I use. I don't really look at order blocks and breakers too much just because they're so subjective. Like right here, sure, this order block played out, right? I mean technically I guess this could be a breaker because we ran low here, but like where do you define that? You know what I mean? Like because like this also became an order block. Like we also delivered to this breaker right here. Like they're just too subjective for me. You know what I mean? Whereas for value gaps, like not every down or up candle is a fair value gap. Whereas like I know ICT says not every down or up candle is an order block or a breaker, but it's really hard to define, especially for a new trader. Like, how are you supposed to know what those key levels are going to do? So every time I go into the market, I look at the Asia low, the Asia high, the London low or the London high, the pre-market low or the pre-market high, and that's really it. Like, other than high time frame for value apps, like I'll pull up the daily. I like daily for value apps like this. I use that as a draw. Earlier in the week we didn't run it, but this, like inverting this tells me, all right, we're gonna go higher, stuff like that. Using those time-based key levels, like it really just saves you so much trouble in trying to decipher like which highs and lows actually matter. Um, and another thing that I can go over is when I use lower time frame key levels. Okay, because I don't always use super high time frame stuff. Like let's see, I believe it was on we had PPI. Yeah, we had PPI on Tuesday here, so let me go back there. All right. So when I on data days where we have important 8:30 news, I don't really look at high time frame key levels. I actually just look at low time frame stuff, right? Because you don't need it. Because all that really matters here is this candle, right? The PPI candle and what we do after it. Right here we had turtle soup within the PPI candle. I took this inverse fair value gap. We got stopped at break even on that one because we were holding a runner up here. But then we took this one again. I believe this was at the 10 a.m. macro. Yep. We ran that sell side and boom. So this is really the only time I don't use high time frame key levels is when we have data and we're playing in that data range because you don't really need it, right? Because like I know there's high time frame draws on liquidity, but you just don't need it. Like especially here where like see I caught a good move here. This was my first TP. Like you can catch good moves just within that data range. But even that, it's time based, right? Because it's 8:30. Like you don't want to be using non-time based high time frame key levels because it's just not really gonna be as reliable as time-based ones because they don't have the narrative behind it. Every single trade you take, it needs to have narrative. Like I like to like say to myself, why will this trade work? Like why? Like think of every like I put it in terms of like traders. Like all right, traders have stop losses here. Once that gets run, we're gonna want to go higher because traders have stop losses up here. Like I try to add narrative to my trades and add narrative to why the high time frame key level I'm using will work. Because like right here, why is this not good? Why is this not good? Because we have the Asia low right here. We have a high time frame key level that's time based right here. Why would we come down to here, rebalance this without running out these stops? So that's why I didn't long in there. I waited for the Asia low. And you know, there's other ways to find high time frame key levels. Like using the daily. That's another way that I like to use time based ones. Previous day high, previous day low. It's super reliable when you get it, but the frequency is a bit. You don't always run PD high. You don't always run PD low, but I still like using it. And then you can also look at time based ones as getting disrespected. That's another big thing. Like for example, right here, if we come down to this and we invert it, that's huge. That tells us so much about where the market's going to go because that tells us that we're going to be bearish because this is super time based, very important key level CPI. If we invert that, then we're probably going to go lower, right? Because we're not going to come below all this, come into the fair value gap, rebalance it, and then go higher, but close below it. That doesn't make sense. Um, if we're going to come into it, we'll probably react off of it. And if you invert time-based key levels, then you can use them as inversions. Um, like again, if we invert this, then this could become a premium array, like something like if we come down here and then like up back to it, that would be nice. I really like stuff like that. But yeah, really, you just have to use time. And another high time frame key level that I love, you don't get it too much, but when you get it, it works. It was actually part of the PPI trade that I showed. Is new day opening gap and new week opening gap. I love these. Like when you get them, you don't get them a lot. You don't get them a lot, but they're obviously time based, right? Because it only happens at a certain time. You can only get a new day opening gap at 6 p.m. Um, and I think they're some of the best draws on liquidity, best things to react off of because like obviously we're gonna fill that. Like it's not a question of oh do we need to fill this imbalance? No, it's no orders are filled there. We have to fill the imbalance. Um, and yeah, you really just use time to find your high time frame key levels. If I were to restart, I would really just focus on high time frame stuff and not worry about the low time frame stuff. Like I started trading TJR's style, looking for that liquidity sweep, break of structure, it doesn't matter. Break of structure does not matter. Even inverse fair value apps, it doesn't really matter. Basically, what those low time frame entry models do is they let you define your risk. They let you define when you're going to enter, where your stop loss is going to be, where your take profits are going to be. Everything else is based on the high time frame. You don't want to be taking trades just based off low time frame stuff. Even if you are a low time frame trader, like say you're a scalper, then you just use lower time frames as your high time frame. Like you can use a 5 minute fair value app instead of the 1 hour fair value app and take like a 15-second trade. I would understand that. That's how a lot of scalpers trade. But you need to have high time frame buys. I can show you how many inverse fair value apps here don't play out. Like you know what I mean? Like all through here, none of them work. Um, like low time frame fair value gaps getting inverse doesn't mean anything without the drawn liquidity, without the bias, without the narrative. That'll be my next video probably is bias and narrative because this is basically just like a building block to that. I use the high time frame key levels as areas that I look for reactions off of and use that to build my narrative. Um, and then the last thing that I want to go over is that I do use opens as key levels, like for example the midnight open. Um, that's one that I use. I'll look for like manipulation above like 9:30 open. We didn't get it today, but you can use that as well just because it's basically like an implied time discount or premium. Like if we're below it, it's a discount. Above it, it's premium. It can be useful. I don't use it alone. I use it sort of just as a confluence. Um, and yeah, as always, let me know if you guys have any other questions. I will continue posting every example of my model in my Discord. The link will be in the description of this video. Join the Discord, talk to me, ask me questions. This video is actually based on a question someone asked me in the Discord. So yeah, ask me questions. I'll make videos about pretty much anything that you guys have questions about. I love talking about trading. I love this. Like I'm very into talking about it. Like I like teaching, I like helping people with it. Ask me questions, join the Discord, subscribe. I appreciate you guys.